How are we getting on, folks? Luke here from LAGFX. We are back today with a new top trades of the week video. In today's video, we are going to be highlighting and covering two trades that were placed on the XAU USD market. So this is the gold to the US dollar. These were two long positions that were placed earlier on in May that generated us with over 13% on our investment. Now you can see the two positions here that we took part in, and I'm going to run through my analysis as to why I actually placed the positions and give you a bit of an insight on what I'm thinking the gold market is going to do over the course of the next few weeks. Make sure you stay tuned to the end of the video because I'm going to be giving you my new insights for the gold market, giving you guys the opportunity to take part in some trading opportunities and hopefully profit in these markets as well. As always, if you go on to enjoy this video, learn a thing or two, don't forget to leave it a thumbs up. I appreciate all the support you guys provide. And if you have any questions or queries with regards to the analysis, please leave them in the comments below and I'll get back to you as soon as possible. Okay, so to start off this video, what I'm going to do is just go to the daily time frame so you can see here the overall structure of the market. This kind of just gives us our bias and the direction that we ought to be trading in order to have a higher probability of being successful. So you can see here that quite evidently this is a bullish market. I assume you're all aware that gold is always going to hold its value with it being a precious metal, especially with how the economies are at the moment and with everything that's going on in the world. This is a market that we are going to see stay in this bullish state over a long period of time. We therefore want to be looking to buy into gold. We just want to see price pull back into areas of demand in order for us to get better entries. So this is just to kind of give you a good look at how this market is very much bullish and how we ought to be looking to buy into this market rather than selling. At this current data that price has been putting in over the course of the last 2 months, you can see how price is really ranging. We're seeing that price is staying within this range, and we haven't really seen any crazy new highs being created like we have done with this rally here. So this tells us that demand in the market is scarce, it's running out, and supply is actually being introduced. Now, as we go down to the 4-hour time frames, you can see how we were actually delivered with a break of structure to the downside. So the reason why this represents a break of structure is because this low here, so this pullback here, traded us into an area of demand, which then traded price up as demand was introduced, supply was offloaded. This created a new high, which was once the highest high that price had created. So therefore, this was the last protected low. So once we saw price trade beneath this told us two things. One, that enough supply has been introduced to give us that S&D flip. And the confirmation of that is because we have broken that protected low. Because realistically, in the laws of bullish structure, we don't break the lows, we break the highs. So with us breaking this low here, we are now following the laws of bearishness, where we protect the highs and we break those lows. So with that being said, I was then under the impression that price was going to continue its correction. And it was in my interest to find an area at which price may pull back down and into before taking us back up in this market. So this gave me the confirmation to look for areas of demand to buy into this market. Now you can see here that what I've highlighted represents a clear, unmitigated order block. This is an unmitigated order block because there are sell orders within price, okay, in this area that price hadn't traded into. Yes, we saw price wick in, but this has merely swept this market, leaving this area unmitigated and leaving these sell orders still open. Now, when institutions leave these order blocks behind, they need to be cleared in order to continue the momentum in the direction that they desire. Now, the reason why we see such a sharp turnaround when price trades into these areas of supply or demand is because you've got to imagine that there are a lot of sell orders that have been opened here. So once price trades down and into them, a lot of those sell orders actually get offloaded, so they are closed and a lot of demand is introduced. So a lot of buy orders are then pushed into the market, which evidently increases the value of a currency, commodity, precious metal, whatever it is that you're trading. And that's exactly what happened. So I waited patiently for price to trade down and into this, and you can see price swept this zone for the second time, delivering us with this large wick. So whilst price traded down and into this area, we have mitigated the orders in that area, closing those sell positions, loading up on buys, which gives us that S&D flip. We are removing supply from the market, introducing demand. This increases order flow in a bullish way. And this was evident as we saw bullish structure being introduced. This was the last protected high within this bearish structure here. Why? Because these highs created the lowest low. So once price broke this high, that was the confirmation we needed to suggest that price is now no longer following the laws of bearishness, but is now following the laws of bullishness. In bullish structure, we protect those lows and we break the highs. So I was under the impression that this low was now protected and we were going to start breaking highs to go on to create new ones. Once price broke structure to the upside, I understood that price would need to pull back initially before a continuation higher. So what I did was I looked at the impulsive wave that broke the structure, which is from here to here, and I tried to find areas of interest that price may pull back down and into. What caught my eye was this fair value gap. And if you guys aren't aware of fair value gaps, I'm more than happy to do a video on them. I will actually create a video based around fair value gaps. This is another piece of confirmation that I look for, or another area of interest that I look for when entering or finding potential positions. But this represents a fair value gap. And what we wanted to see was for price to trade down and into this before trading us higher. Now, price did exactly that. Now, you may be wondering, well, what kind of confirmation did I have in order to actually get involved in this position? Well, you can see here that price set this low, and this was the high that created it. I saw that price traded up to create an equal high before trading back down. Now, when price traded back down, this is actually when I entered in on this market. And I entered in on this market on the basis that price traded back down into a hidden order block here. So I understood that there was demand and liquidity stopping price from breaking these lows here. So I knew it was a matter of time before price shot up, as it has done. And this is where we obviously got involved. Now, I actually got involved twice in this market. And my reason for this was because if we go down to the 30-minute time frames, you can see that I marked out another area of interest. So this is a hidden order block on the 30-minute time frames. And if we go down to as low as the 15, you can see that this hidden order block becomes more visible. We go down to as low as the 5. Again, you can see this area of inefficiency here representing and showing itself more clearly. So this here represents bearishness within a bullish leg. A wick to the upside followed by a wick to the downside is bearish structure. Again, if you don't understand this and you're unaware of how to read candlesticks and the patterns that they produce, leave it in the comments. I'm more than happy to create a video on it. But what I wanted to do, or what I wanted to see, was for price to trade down and into this area of inefficient structure before price traded higher. We saw price clear this area of demand before price traded us up. Now, I only entered in once we saw a break above this hammer candle here. Once we saw price actually create some bullish structure and some bullish candles, that's when I got myself involved. I gave myself enough room to breathe with my stop loss, leaving it 20 pips below the zone that I got involved in, and I set my take profit just below the supply zone that I had marked out previously. Now, what I'm going to do is I'm going to throw some screenshots up of the group chat, so the VIP chat that I have on Telegram, going through this analysis just to kind of give you guys the confirmation that the analysis I provide is there before the position has been placed, as well as the actual position itself. So what I'll do is I'll throw up the trade that I placed. So I always let my clients know the trade that I've placed, so what I'm buying and selling, so you guys can use that to your advantage. I'll also throw up some of the analysis that I provided as well to the clients before, during, and after. And I'll show you some of the profits that I made as well. As I say, I made around 6% from this trade. I made about £6,000. This was because I took partials throughout my position, and I used and applied safety measures throughout the trade as well. But this was a brilliant opportunity. This was a brilliant trade and a brilliant opportunity based on looking at the price action in this market and following the structural laws that most markets respect time and time again. Now, unfortunately, my take profit was set a bit short, but that was because I had this supply zone marked out, and I was under the impression that once price traded up and into this supply zone, we were going to then see a continuation in bearish structure. As I do believe price is going to put in a heavy correction. And as you can see, price is in fact starting to actually do that now. So yes, our take profit was short-lived, but we still managed to walk away with a 12 RR trade, which is absolutely phenomenal. Now, you might be wondering, well, what's my analysis moving forward and how am I looking to tackle this market? Well, you can see here that price has again broken structure to the downside, just as it has done here. What does this suggest? This suggests further bearishness in the market. We have been delivered with that. What we are seeing now is price actually creating equal lows, or lows that are very close to one another. So this tells me that the supply in the market is becoming quite scarce. Demand is being introduced. So I'm under the impression that price is actually going to put in a heavy corrective wave to trade us up and into an area of supply before a continuation to the downside. So I am wanting to see price trade up and into this area of supply now. Once price trades us into this area of supply, I would love to see a continuation in bearish structure. So we can look to buy into this market to trade into this area of supply, but ultimately I'll be looking for those shorts. And you can see that we would still be following the laws of bearishness, even on the higher time frames. Now my take profit would be set at this point here, as this is an area of demand, I have area of interest that I would love to see be cleared before a potential reversal to go on and create some new highs. So I will personally be buying a lot of gold. I buy gold, physical gold, myself, not just through forex, but I actually invest in gold and silver. I have done for a very long time. So I will be buying more gold around 2241 and obviously keeping hold of that for a longer period of time. But ultimately, I want to see price trade up into the 2405, 2412 area before I look to see this market continue in any short way. Now, if we just look at this structure, you can see that we have a high set followed by a low, followed by a lower high, followed by a lower low. So we are following the laws of bearishness. So that's my analysis for the coming weeks on XAU USD. Definitely look to buy into this market, but just be cautious as to where you set your take profit and be prepared to go short in this market temporarily to trade us down to the 2238 area. Plenty of room there to make some good money. And yeah, I hope you guys have enjoyed my top trades of the week video and the trade that we actually placed. As I say, throughout this video, I will have thrown up some screenshots of the trade itself, the analysis before, durings, and afters, maybe some TradingView screenshots. I post a lot of my analysis on TradingView, and obviously some profits as well. Now, like I said at the start of this video, if you guys have any questions with regards to my analysis, how I trade, if you're questioning whether my analysis is authentic, the profits are authentic, leave them in the comments below. I'm more than happy to have this discussion. Any discussion is a good discussion in my eyes. I'm more than happy to go through things. If you don't understand fair value gaps, let me know. If you don't understand structural points or price action in the forex markets, again, let me know, and I'm more than happy to cover those topics in future videos. But I just want to say a massive thank you for watching. If you have stayed this long, I'm wishing you all a very profitable week, month, and year in the forex markets. And if you are looking to get involved in the gold markets. Take a look at this analysis and mark out some zones and areas for yourself and set some alerts. But with all that being said, guys, thank you very much for watching, and I'll catch you all in the next Top Trades of the Week video.